big cut in the Hang Seng market. That one is down around 1.7%.
Most of the participants in the meeting still saw significant upside risk to inflation.
You need to close above almost 19,500.
The IP numbers coming out of your euro area, they're terrible numbers.
The cabinet has yesterday gone ahead and approved 7 multi-tracking projects worth over 32,500 crore.
So I think this is an excellent scheme which has been really developed.
UBS has initiated on Shriram Finance with a buy recommendation.
Absolutely quiet opening for the market. The Nifty is down about 20 odd points.
That from a top-down perspective, India looks quite attractive. The longer-term outlook is very, very good.
We understand that Bata India is in talks with Adidas India.
The market continues to be fairly range-bound, Pavitra.
Yeah.
There's nothing dramatically changing.
Rajiv Jain's DQG is betting big on India and now increasing the exposure beyond the Adani Group stocks as well.
The chinks in the armor began to show around the second half of FY22.
See, Life International offering US dollar denominated life and health insurance.
We have the Nifty, which is down around 120 odd points.
Well, that was the day so far, and it's pretty much a similar kind of day that we've been having. Not very much has changed. We're down 100 points. You're with us here on another edition of Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me over the next hour, my colleagues Surabhi and Nigel. Guys, hi. Afternoon.
Hi, afternoon, Prashant. Afternoon, Nigel. I guess the pressure's on. It looks like a very interesting next 60 minutes.
It's not like yesterday or like Monday, right? I mean, it's a little different because we were wondering whether it'll be, third time lucky. The market sees a dip and then for the rest of the day, it keeps recovering. It's been a bit of an opposite kind of a day. Not very much in the morning, small cut, 20, 25, 30 points, and then a little bit more. But again, I mean, this is 0.5%. All said and done, 0.5%. So, just to kind of put it into context, it's nothing very large or anything. I mean, let's look at market breadth. It's about 1:1. But the fact is that people are used to green. I mean, deep green, not any shades of red. And that's the issue. Reliance and ITC are contributing about 50% of losses. We can talk about more stocks in a bit. I would still kind of say that watch for the 19,360 at close on the Nifty. We are actually within 10 points of it. So it's neither here nor there. But a decisive close under it, which is the 40-day exponential moving average, I think perhaps puts bulls on the back foot a little bit more. Mid-cap and small-cap indices are higher, but not like yesterday or on Monday. Small-cap indices on both those days were up 0.5, 0.6, 0.7%. Today, they are higher, but they've come off. I mean, actually, even in the first couple of hours, the small-cap index was cruising along nicely, but it's given up gains and more flattish kind of trade coming through there as well. Surabhi.
Yes, Prashant, absolutely. It's a bit of a nothing kind of a day across global markets as well, right?
Yeah.
A little bit of disenchantment with the Fed commentary that maybe there are more rate hikes coming. There's some red on European screens. It's not too much right now. It's not like there's a big slide. In fact, some of the Asian markets managed to recover a bit. The morning was looking much worse off in Asia. We still have some red. That's the short point. And if we look at our screens, the Nifty at 19,350. So the one key factor that I'll watch out for is whether at least yesterday's low can hold. And that was closer to the 19,315, 316 kind of a mark. So that's one thing. Can the Nifty at least defend that boundary? When it comes to the contribution, as Prashant pointed out today, banks are not the problem, not as much as much of the problem as they have been. But it's some of the other sectors. IT has been dragging its feet. FMCG is quite weak. Names like ITC, which are the biggest losers right now on the index. Reliance is compounding the problem for the bulls. So that's where the weakness is. If anything, banks are actually offering a decent counter. For the time being, stocks like SBI, for instance, are holding out. Even an Axis Bank is managing a gain of just under 1%. So the Nifty Bank is down, but not as much as the Nifty, which has usually been the trend. In fact, for that particular index, I'll watch out for the fact whether the 100 DMA for the Bank Nifty can hold. Till now, it has, and it's a good 200 to 50 points from where the index is right now. But that zone, that level of 43,600 thereabouts, that level is held for the Bank Nifty. So that's on the banking side. On mid-caps, as Prashant mentioned, we are seeing some outperformance. You saw the crisscross lines on the screen just now. They're not as wide. The gap is not as wide as what we had earlier. But there's still some green, and those are some examples. Some stocks that are managing to move around quite interestingly. J&K Bank, by the way, is up 35% in the month of August. So Nigel, like you always say, that, what are we complaining about the indices being range-bound? Look beyond and there's plenty happening.
Well, there's plenty happening out there. But for the next 60 minutes, I will want to focus on the index. And the reason I say that is because we have an expiry that's going to play out, weekly expiry that's going to play out. It's going to be quite interesting because positioning as of now is we don't move beyond a 40-50 point range on. The 19,400 call, well, that's fairly active in today's trading session. And 19,350 call as well. Both of them, big open risk build up. Now, the 19,350 call, let's pull that up. On an average, the premium today has been around 40 rupees. It's come down to around 25, but on an average, it's at around 40 rupees odd. So those call writers, they're looking at that 19,390 odd level holding out. So that's the reference point on the upside. On the downside, well, you have 19,350 put. Now, on an average, that's been around 15 to around 20 rupees through the day. So the range that you're getting is, the support is at around 19,330. And on the upside, you're expecting that 19,390 odd level to hold out. If we breach either of these levels, positioning is such that we stay in this band of around 50 to around 60 points odd. If we break, either which way, then maybe we'll see a quick 30 to 40 points as we normally see on an expiry day. So that's the broad outline that we're looking at. That's about positioning. But how do you position yourself final hour of trade? Well, Mitesh joins us to help us out. Hi, Mitesh. Good afternoon. Well, nothing sort of day, right? We started off, we went a little bit lower. But I think the last few hours we've been pretty much range bound. How do you see this playing out?
I think, difficult to guess what kind of ending we'll have for the day, particularly given the fact that it's an expiry. But overall, I think the broader view of the range bound trade remains. Trade with stock specific biases, we are not at the edge of the range, which is where I think, in the indices could be traded. So we are avoiding the index very clearly. The VIX has risen marginally. But I think what I'm observing is that in case there's some weakness coming in and the VIX 200 average is at about 13.18 and we got a high of around 12.66 today. We're trading around 12.3. So if this 13.2 will be crossed in the next 1-2 days, then I suspect that there is a risk of breaking below 19,200. Otherwise, it should be all okay. So trading with stock specific biases for the timing, as I mentioned earlier. IRCTC is something which is bouncing back from its 10-20-day average zone. That's a buy with a stop just below levels of 643, 642, and a target of around 670 can be looked at. And on the selling side, MCX is something which is slipping slightly negatively, trending negatively. That's a sell with a stop at about 1596 and a target of around 1530 can be looked at.
Mitesh, a name we don't usually talk about, but if you will pull up the chart, just look at it. Global Spirits, I don't know if you have any thoughts. It's down 7%. I think there was that block deal this morning as well. And there was an issue, there was a fundamental issue as well with, the government stopping supply of FCI grain for production of ethanol. But that happened and the stock took a bit of a hit from 1,300 kind of levels a month and a half back. It's at about 930. Global Spirits, any thoughts?
So Prashant, while I don't track this very regularly, what I can observe immediately is one, today's low is at the 200 average of 925, but the weekly trend is very negative. So I think if somebody is stuck, either, if it starts trading below 920, exit it out, or if it gives you a bounce back and from the throwback from the 200 average, try to exit between the range of about 1,000, 1,015. I don't think there's more upsides. In fact, there is a good chance of more downsides happening over here. The only saving grace could be some buying from the 200 average.
Okay, got that. We'll keep that in mind. Thanks for that. Mitesh, we'll come back to you in about half an hour and get some more trading ideas going. But now let's focus on one stock that's been moving higher and higher in an otherwise lackluster market. And I am talking about Bata. The stock's been moving higher actually ever since you heard the exclusive right here on CNBC-TV18. It's an interesting development that seems to be underway at the company. And it could involve a global giant like Adidas. We have Vivek joining in with more details. Vivek, fill us in.
Well, absolutely. Like you mentioned, what we understand from our sources is that Bata India is in talks with Adidas, and this is regarding, a strategic tie-up that both of them are looking at, both of them are exploring as far as the Indian operations are concerned. We also understand that these stocks are right now at a very mature stage and an announcement could come anytime soon. We also understand that the final deal contours in terms of what exactly does each party stand to gain in case such a partnership fructifies is what is being discussed currently. We reached out to both Bata as well as Adidas. They haven't yet responded to our queries. Also, what we understand is that, regarding the rationale for this particular development, remember, Bata has a very strong retail presence, over 2,100 stores across 700 cities in India itself, and this is one particular segment that Adidas would look to tap. In terms of financials, Bata at the end of FY23 had revenues over 3,450 crore, and as per filings that we saw, Adidas at the end of FY22 actually had revenues of over 1,400 crore. So it could be a significant addition and a sizable addition as far as Bata is concerned to its revenues. But still, we would need more details in terms of the exact nature of the partnership. And this particular space, just to give some context, has been quite active in terms of deal making. Remember, in FY23, Metro Brands actually went ahead and acquired Cravatex, which held the rights to Fila as well as the Indian sportswear brand Proline. And along with that, in August 2022, Aditya Birla Fashion and Retail acquired exclusive rights for Reebok India. So this time around, we understand it could be the turn of Adidas to go up and tie up with an Indian major.
Okay, and I just want to put out a chart. Vivek, thanks very much for that. That's an excellent story. Last 3-year chart for Bata India, which basically tells you what today's move means, just to put things into context. So let's just have that up. And Mitesh is still with us, so I just want to ask him if this qualifies for this becomes tradable on the long side. I don't know, Mitesh, I'll ask you. But this is from the, the top is November of 2021. It's a downward sloping trend line, and then there are all these touch points around August of 2022, and then nothing all the way till today. Today, after we broke the story, it's crossed this level. That trend line meets the price at about 1,700, and we are trading above it as we speak. We're at about 1,750 or so. So, Mitesh, just thought something that viewers would want to take note of. Any trades on this one though, Bata India?
Two observations, Prashant. I would slightly differ from what you just mentioned. The trend line is there, but I think I'm using a log scale to draw the trend line. Last week, which is the 4th of August ending week, we got a closing of around 1760 here after a high of 1763. Then we saw the stock went through a correction. Again, the high here was 1770, and then it declined all the way and is back to those levels. And this week's high is about 1768. And the trend line which I've drawn on the log scale charts is at about 1760 odd level. So I think once this 1760, 1770 zone has been cleared out, last 3 weeks of high is there. So the 10-point contains about 3 pivots intraday charts and the trend line on the weekly charts. I think once this level is cleared, I think the stock will definitely become very attractive. In fact, above 1770, I would expect at least 1900 kind of levels to be tested over here. So the setup is positive. Wait for this week's high to be taken out and then take it.
Okay. All right. Got that, Mitesh. Thanks very much for a quick view on Bata. Let's bring in Dilip Bhatt into the conversation as well. He's joining us on this leg of the show. Dilip, thanks very much for joining in. Good afternoon to you. So actually, let me toss that question to you as well before we talk about other stocks. Bata, the news that we're picking up is perhaps is a global tie-up that's in the works. Your thoughts on how you're looking at the space?
Well, I think the way we understand Bata at the moment, I think it's going to be a phenomenal advantage to Bata because you're going to milk out more sales out of the existing outlets. And I think that itself would mean that the ROIs would improve very significantly. Of course, that has to be seen. What is the final nitty-gritty and the fine prints of the final agreement if that materializes? But I think all said and done, it's for Bata, it's certainly a great opportunity how to leverage up their sales. And I think that itself will mean a lot in terms of the top line, and possibly a lot of it will get flown into the bottom line because the operating leverage will play out in a very big way. So I think it's a very good scenario at the moment for Bata if that materializes.
Okay, all right. Well, Dilip, I wanted your talk, your comment on a couple of these cement stocks. We had a big deal that took place, just in the last week or so, and the mid-cap cement, they're picking up a lot of traction. Do you think that that there are a couple of stocks that you like from there? Because we normally see when in this sort of a cycle, when one deal gets announced, the small become mid caps and the mid caps start gradually re-rating towards large caps. Your view?
Sure, I think these kind of deals do tend to become a little more contagious in terms of upping the valuations for the smaller companies. I think this entire space, India Cement still looks pretty good and interesting because time and again, we know that the promoter might sell it off. We don't know what the fact is, but that is the kind of news that surfaces time and again. But overall, if one were to look at the corporate developments, and from that angle, I think India Cement looks pretty interesting from amongst all the cement companies that we are talking about, especially in the mid-cap space, with the kind of capacity that they have and the kind of some of the good market investors that they have. I think this company possibly looks a very potential candidate. And even otherwise, I think primarily on a valuation basis also, for anybody to acquire, I think India Cement still appears a lot more juicy at the moment. And I think there's still enough steam left in this particular counter should any corporate development take place in that.
Okay, all right. Dilip, we've heard it before, but let's see whether or not something's going to take place out there. The promoter entity holds roughly around 30% stake, and you have Mr. Damani in there that has more than 20% stake. The street has been waiting for a deal. Let's see whether or not it comes about. Performance hasn't been great, but valuations are supportive for India Cements. Well, by the way, we have a recovery on the markets that is underway, gradually moving towards that 19,400 odd mark. As I said earlier, 19,390, that becomes a bit of a reference point. Adani Ports moves to the day's high. SBI as well is moving higher in the last few minutes. And Tata Consumer as well, moving with good momentum. So some of these stocks should come up for you on the screen. Well, time to slip into a short break. We'll be back. Our Alpha Manager of the Day will be joining in. Gautam Sinha Roy of ICICI Prudential Life Insurance will be joining in. Stay with us.
Welcome back. Tracking some interesting trends from the market. Now, stocks of e-bus manufacturers have been in focus, and many of them have been trading in positive territory, actually. This after the union government approved the PM e-bus service scheme, and that has a pretty big outlay of over 57,000 crore rupees. Sonia is joining in with the details. Sonia, some of the smaller names like JBM Auto, Electra, Greentech, they've been quite excited today. So do tell us more.
Oh, you know, this is all we've been talking about, right, for the last 48 hours, the kind of movement that we've seen in the EV bus manufacturers. And yes, last evening, the government came out with a release where they said that an outlay of 57,600 crores will be approved for this e-bus service. This will include 10,000 electric vehicle buses spanning across cities in India. And the e-bus manufacturers have all been up and about, whether it's JBM Auto, Tata Motors, Electra, Greentech, Eicher, or even Ashok Leyland. Now, we had a word with JBM Auto where they said that this scheme will benefit 3 lakh people, but it will take about 6 months for cities to develop their strategy. They're expecting the delivery of vehicles to happen only 15 months later, so not in FY24. Hence, they have retained their guidance of 6,000 crores of revenues in FY24. And margins in the range of 12 to 13%. They also spoke about how they don't need to put any more capex at work. They already have a production capacity of 20,000 electric buses, and they are well on track for order execution as well. They have an order book of 5,000 EV buses currently. But I just want to mention, these stocks have rallied quite a bit, so some caution is definitely required on board. JBM Auto, for example, in the last 6 months has rallied 164%. Electra Greentech is up 190% in the last 6 months. Tata Motors is up 40% as well. But having said that, brokerages continue to be quite bullish. Goldman Sachs says that these companies already have a robust order book, and on top of that, this PM e-bus Seva scheme will definitely augment their order book. They have a target price of 710 on Tata Motors, 230 rupees on Ashok Leyland, but there are no details on the implementation of this scheme, so some more clarity is required. Back to you.
Okay, all right. Thanks a lot for that, Sonia. Well, earlier today, we also spoke to the management of JBM Auto on the cabinet's decision. Let's hear out what he had to tell us.
So I think now majority of these cities would be developing their strategy for execution, and it should take about the next 6 months for them to develop their strategy, and 6 months post that, so about a year to 15 months for the whole execution to happen and things to get going. Post that, the delivery of the vehicles would start happening. So we are already very well equipped with a 20,000 electric bus manufacturing capacity for delivering these buses. And on the other hand, if any such requirements do come up in terms of technology or other kinds of capex, then we'll plan it accordingly. Today also we have an order book of more than 5,000 electric buses, which we are delivering in the next 12 to 13 months.
Okay, so that was the word from JBM Auto. Dilip, I want to take up the point that Sonia was raising, and I guess it's a valid question to ask, that these stocks have run up anywhere between 100% to 200, 250% in the last 12 months. So how much of the opportunity is already priced in? I mean, do we run the risk of pretty much joining in at the peak if anyone is to buy now?
Sure, I think I would share the thoughts. Certainly from the current levels, it doesn't, on a risk-reward basis, it is not loaded in favor of the returns. So I think one should definitely be cautious, because all these companies, they have run up based on the anticipated orders that was around the corner, because that is always making news, that big order is around the corner. The second part is these companies on the electric side have yet to demonstrate very adequately whether they can make profits on their own, even after considering EBITDA. And if I'm correct, except for JBM, which says they have a capacity, the other companies also would require funds and capex to augment their capacity. So all in all, I would say from the current levels, it's better to be safe and watch from the sides rather than just rush to buy some of these stocks.
Okay, all right. No, got that. So wait on the sidelines, wait for, I guess, some pullbacks, and don't chase them higher is the broader point that Dilip is making right now. It's once again, by the way, as I said in the right at the beginning, the advanced decline is 1:1. But just take a look at the number of stocks on the way up on significant volumes. And I'll not start with what we've already discussed quite a bit. I'll start slightly, lower down. So just a few names I want to put out. Sakti Sugars, if you can have the name up, 6.5% higher. That's the first one. Stocks at about, what, 27 or so. You look at something like a Jubilant Industries, 8.5% higher. The stocks at about 670. There is, what else? Pokarna. Pokarna is up about 5.5%, 455 on that one. Tribhuvan Das Zaveri, which is, TBZ, the code. Old jeweler has been languishing, even though Titan has done whatever, and, Kalyan, and I think now this is starting to participate. Crossed 100 yesterday at 108 with an 8% move this afternoon. Pre-call is up 8%. Stocks at about, what, 320 odd. Now, all these have got decent volumes, mind you. Orient Paper is up about 11 or 12% at this point. So that's got stocks at about, what, 50 rupees. You've got Jay Corp, which has been sort of, rallying off and on, 9% higher, 191. West Coast Paper, so yeah, I mean, more than one paper stock here. JK Paper, so yeah, I count 3 now. So paper is a theme, small sector, but moves together. There is something called Avalon, which I think is a electronic manufacturing, contract manufacturing company. It lost 20% very quickly between last Friday and when we came back this week. That's up 14-15%, so big recovery on Avalon. Ashoka Buildcon is up 8.5%. There is HBL Power, which is up 6%. So you kind of get the idea of the depth of this move, which is pretty large. And then, of course, I think we get to stocks which we've discussed quite a bit, which is your Batas and your J&K banks and others. So quite a long list of these names, small caps, which are doing very, very well. Dilip, out of the names I mentioned, anything strikes a chord? Anything you want to take a shot at?
Well, I think the paper industry seems to be doing pretty well, because if you were to see the quarterly results of most of them, and including the smaller ones, they have reported a huge jump in their EBITDA as well as in the profit, in the net profits. So I think paper as a theme still certainly looks pretty interesting. But you know what? Actually, we have always seen, in my opinion, the pattern is that when the FII flows gets going, and when the front lines look a lot more exorbitantly expensive, I think we see a lot of action in the mid-cap and the smaller cap space. And this time round too, we are seeing a similar kind of a pattern. But having said that, yes, on a selective basis, certainly the stocks which you're following, and if you like it, you must try to buy. But amongst the names that you have taken, I don't think we are following any of these names.
Just wanted to also point out, you mentioned Avalon, so I checked if its peers are doing the same jig as well.
Amber is up.
Amber is up about 7-8%. Dixon is down, but Keynes and Sirma, some of the smaller players on the electronics, manufacturing and designing side, those are stocks that are up and about. I think a lot of these companies had fairly subdued numbers. I mean, nothing that was lighting up the charts after a huge run-up in stocks. But the numbers weren't too bad also. I mean, you could argue that. So after a bit of a cool-off, I think the buyers are back.
So I did a piece on Editors Roundtable in the past Friday. And a lot of these companies, very good stories, a lot of interest out there, EMS plays and the likes. The problem was that they saw margin compression in the first quarter if you compare it with a year-on-year basis. And some of them had a very good quarter 4. So that's why the street was a little bit disappointed. Valuations had gone through the roof. So now some of them have corrected a little bit. So 2 things will happen. Either the performance will recover from you and the stocks as well will. And the second factor is maybe, in fact, they have a couple of quarters more of pain. So we'll have to see how this pans out. Some of them are sitting on very healthy order books. So only execution needs to be tracked from here on. But some of these stocks did see a lot of profit taking, namely Avalon, Sigma, Keynes, because of the margin compression on a year-to-year basis. So that's about that space. But, before we get to our Alpha Manager of the Day, let's get in Nimesh to highlight the big story. Rajiv Jain's GQG Partners is betting very, very big on India. Apart from boosting investments in Adani Group, the fund has also acquired a significant stake in other Indian companies. Nimesh, take it away.
Rajiv Jain's GQG is betting big on India and now increasing the exposure beyond the Adani Group stocks as well. While the GQG's investment in Adani Group is now crossed 25,000 crore rupees. In the last few weeks, the fund has also picked up significant stakes in the likes of JSW Energy as well as Patanjali Foods. Yesterday, GQG committed a massive 9,000 crores by investing close to 8% in Adani Power. They bought the stake from Adani promoters. The global fund has also acquired nearly 1.5% stake in the last 1 week in JSW Energy, investing close to 760 crores. And last month, they acquired nearly 6% stake in Patanjali Foods by putting in close to 2150 crores. They bought this in offer for sale. Now, the big bets for GQG in India are still the Adani Group stocks. Since March 2023, post the Hindenburg saga, GQG has invested across all the Adani Group companies. In Adani Green, they invested close to 4,000 crores. In Adani Enterprises, they've invested close to 5,400 crores. In Adani Ports, another 5,300 crores. And in Adani Transmission, they've invested 1,900 crores. So let's look at GQG's profile. It's one of the marquee global funds managing over $100 billion. In the international equity, they manage close to 40 billion. In global equity, they manage close to 30 billion. And in emerging markets, they manage close to 30 billion as well. Now, India stands out as the country allocation with nearly 35% exposure in the emerging market basket. Apart from the big exposure in the Adani Group stocks, the fund has also have some marquee names in India, which includes the names like ITC as well as HDFC Bank. Now, as I said, the fund is getting bigger and bigger into India. So let's see what could be the next on the radar as far as Rajiv Jain and GQG is concerned.
Willis, thanks a lot for that, Nimish, for spelling that out for us. Well, let's get in Gautam Sinha Roy, Executive Vice President and Fund Manager at ICICI Prudential Life Insurance, who joins us on the show. Hi, Gautam. Good afternoon and good to see you after a while. What's your view currently on the markets? There's plenty of interest. I mean, we have been thumping the table that this decade belongs to India, the next few decades as well. But how are you feeling at current reckoning? Valuations not very, very cheap. Some of those mid and small caps, maybe they're overheated. Your view on the markets, as well as how are you positioning yourself now between large and mid caps?
Good afternoon. I think I would like to agree with you that given the rally in mid and small caps, probably if you had to allocate incremental money today in India, you'd of course be towards large caps. But the long-term story of India remains very strong. Valuations have run up, but they're not very demanding at around 19, 20 times forward. They're not really very demanding. So would you be actively putting money into India? Definitely yes. Would you try to find new stock ideas? Definitely yes. But between mid and small caps and large caps, I think that large caps are offering much more value on the table today, especially given the recent bout of selling that we have seen in some of the large cap counters. And within large caps also, when you see some of the large sectors, be it the banking, financial services and insurance, be it IT, be it some of the oil and gas sectors, I think valuations are definitely supportive in many of these stocks. And the earnings growth profile of large caps is also fairly decent. If you take out some of the volatility-related factors, probably a mid-teens kind of earnings growth India is able to deliver. India is able to deliver today. And within that also, what we are seeing with a lot of interest is that the earnings momentum is improving in the sense that there are more earnings beats than misses, right? So earnings expectations are moving up. So we are in a very positive.
Okay, got that. Gautam, hi, afternoon, Prashant here. Now, this is more a question for somebody who does personal finance, but I'm going to ask you, and this is a real question, by the way. Somebody asked me, and I said, well, I'll put it to, somebody who manages money, and I'll get you the answer. So if somebody's got a home loan, right, and they're paying, 9.5% because rates have gone up quite a bit, they're kind of thinking between whether to take money out of stocks, and stocks have done well, to repay a significant part of their home loan. The opportunity, the cost is 9.5%. I mean, if you can beat 9.5% in a very substantial way, I don't know. I mean, how do you think about that question? It's a real question. I don't know. I mean, I got that from one person, but I'm sure many are in that kind of a predicament, or they're thinking about it like that. Because should you book some gains and sort of, repay liabilities to a large extent? Your thoughts?
Yeah, especially on that's a good question, Prashant, by the way. And, especially on the mortgage liabilities, there could be some tax breaks which have to be taken into consideration. But keeping it simple, if you are asking me whether there is a double-digit return on the table from equities over the long term, That's essentially your question, right? Simply speaking, I think definitely yes. So this is not a market where you're looking for, sustained single-digit compounding only for a long period of time. I think double-digit return in markets is definitely on the table. So hence the answer for me at least would be stay invested in equities. Yeah, incremental investing, how aggressive you are on the equity side, that's a separate question, and that was not your question. But whether one should remain invested in equities and not book profits and fund liabilities, I think one should remain invested in equities, definitely.
But double digit is 10% and 20% also. So would we be closer to... that will also make a lot of difference, right? I mean, if you're making 11-12%, and you're paying interest rate of 9.5%, which perhaps can go up even, what's the trade-off?
So thankfully, you made my question simpler earlier by keeping the hurdle a single-digit number. But yeah, as you're right, double-digit can mean anything. But yeah, I would not be very, very aggressive on that front. I would say early teens is very.
Prashant, what would you do?
I'd pay off the loan. I'd pay off the loan.
I would ask.
You can't put a price on sleeping well, Just, at least a substantial portion of it.
I would ask Gautam the next question that will help me arrive at that same answer, which is Gautam this. Now, the pockets where a lot of money had to be made, I think those pockets have run up a lot, right? And those ideas are well known, well discovered. We're talking defense, we're talking capex, and that's all happened. There are other areas, like IT, where the problems are only too well known. And I don't know if too many people are willing to stick their neck out and go out and buy more now when the tide is low. So the question is, incrementally, if you are going to chase at least those, double-digit returns, let's say mid-teen returns, at least 14-15%, then realistically speaking, where are the opportunities?
Yeah, should be. So the opportunities are definitely in banking, in IT too, especially if you have a 3-year horizon, given the valuations have corrected there, and multitude of other mid and small cap sector where you will at least get the earnings compounding. Valuations have run up, but the earnings compounding from here in many of these sectors should continue to be strong. And these are sectors which have evolved over the last 3 years into very profitable sectors. I have given examples of hospitals and hotels earlier. I'd give the same. We're discussing electronic manufacturing companies a bit earlier, the entire Made in India theme, that is there. Of course, some pockets are overheated. I would think that the capital goods companies, some of the defense names, they have run up quite a bit. They could let off steam for a while. But, we'll have to distinguish between a tactical position and a more fundamental long-term position here. Because, it's very easy to get caught in that tactical thing and sell off stocks. And what's the guarantee that you will be able to buy the same stocks again at a lower price? And they could be multi-year compounding stories. And that's how we are seeing many of these themes today. So that's why my reckoning is that as long as you are getting early teens compounding from markets over a 3-year horizon, this is a kind of market where essentially you don't need to do much, honestly. So, many people are very activity oriented, not a great advice for them to hear. But honestly, this is not a market where you necessarily need to do a lot. This is a market where you just sit tight, according to me.
Nigel, I'll revise my answer. That's an important question. I was thinking about it. I was not expecting to be asked the question.
Yeah.
I think if the question is what would I do if I had a large loan and I had investments which have done well, would I liquidate some of the investments and pay off the loan? I'd pay off 40-50%. And let some run as well and not kind of, if it is 1:1, I mean, let some run. And actually, the loan product is also a fantastic product, right? Yeah. It allows you leverage at a very low cost if you think about it over a long period of time, like 15, 20 years. Right. So, and there are tax advantages, etc., associated with it. So repay 30, 40, whatever, half of it, and let the rest run. I mean, I just want to make that
so benefit of peaceful sleep and the power of compounding all rolled in one.
I'll tell you what I'm personally doing. Actually, I'm paying off the loan in a smaller quantum, but I'm keeping the SIPs going. So that's the way I'm planning, since we are all sharing.
Prudent planners here, both of my co-hosts. Okay.
Gautam, we want to hear more out of you. We are just chipping in with our bit.
Gautam is wondering why this is a personal finance.
Fun conversation. Can I add to it? There's a lot of option value to that loan product, what Prashant was hinting at. To have that, and I personally experienced this honestly and missed it sometimes, honestly, because I prepaid one of my mortgages early. But there's a lot of option value to having, that kind of liquidity at your hand at an attractive price. This comes in really handy when, you want to get more aggressive on markets. So, yeah, not necessarily carrying on that discussion, but I totally agree with you that you should not completely pay off your loan for sure.
Okay, so Gautam, we will then leave it on that note for today. Thank you very much for joining
Interesting chat, right?
Interesting chat, slightly different chat, but very, very interesting. You have a good day, and we look forward to connecting again soon. Quick break on that note. We will come back, and as always, we'll get you a check on what dealing rooms have been saying, all the chatter with Nimesh, and then, of course, a couple of other trading ideas before the day winds down.
Welcome back. Well, we almost went to that mark of around 19,390, and from there, in fact, we've seen some bit of selling. So we continue to remain in that bit of a range as we speak, currently holding at around 19,370 odd. But it's a good time to move across to our special segment, D Street Chatter. Nimesh joins us to give us an insight into what he's picking up. Hi, Nimesh. Afternoon. What are you picking up?
Hi, Nigel. Afternoon. So we've recovered a bit from the intraday lows, but for a change, the feedback is the FIs are better sellers in today's market. So there is a bit of a negative support, so to speak, from the larger FIs today. Yes, there is a small market at close, basket buying, very selective buying is what I understand in some individual names by the larger FIs. So that may play out in some of the individual names in the last half an hour of trade. We've been stuck in that range for the last many weeks now, between 19,200 on the downside and 19,800 on the upside. So that technical range continues for the time being. But I guess the big trend is the block deals. Every day there are so many indications of large blocks happening. In fact, the feedback is maybe there are at least 4 to 5 large blocks which are in the works and which can happen very soon. So the trend continues. But I guess today, for a change, there is negative sell flow, or maybe a sell flow, so to speak, from the larger FIs.
Yeah, Nimesh, I guess it's also a sign of times, right? It is a market that's been deepening. The fact that so many blocks are happening, they're getting absorbed, and sellers are getting a good price, the buyers are interested in buying the equity, tells you about the maturity of the market. So fill us in on the chatter list today, on the stock list. Do you have more names where potentially deals are around the corner?
Well, honestly, today for a change, I've not picked up any of those chatter where there are block deals because I'm tired of reporting the blocks every day. So, so the first stock today on my list is JM Financial. Big move on that stock in today's trade. The volumes are on the higher side. Generally, you don't see that kind of a spike in a stock like JM Financial, but I understand the reason is largely because one of the domestic mutual fund has turned active buyer in JM Financial, and also there is a very strong indication of a corporate development in JM Financial very soon. So that explains the move in JM Finance today. The second stock is Voltas. Again, this is one stock which has largely been underperforming. It's almost at 52-week close as well. But now at these levels, there are first signs of some bit of buying interest back in Voltas, and today for a change, there is good amount of buying interest from some larger FIs. So that's Voltas. The third stock is NTPC. Again, not reacting to very strong buy flows in today's trade, but I believe the delivery volumes are going to be quite high. And power as a space has done well. And again, now there is a bit of interest in NTPC as well. So that's the third one. And the last stock is Tata Motors. Down in today's market, largely on small sell flows at an FI desk. But for Tata Motors, I guess, apart from flows, the next big trigger to watch would be the Tata Technologies IPO. And that is expected in the month or so. So maybe that could be the trigger to watch as far as Tata Motors is concerned.
Okay, all right. Nimesh, thanks very much. Interesting list. Nevertheless, as you said, we'll get to hear many more, block stories about blocks and M&A, etc. Well, let's get in. Mitesh is now joining us with quick check on what he's making of the market now. Mitesh, hi, welcome back. 100 points lower, so right there, I think where we started at 230, 19,365. Fresh thoughts and fresh trades.
So, basically, the index, as I said, I think, I've been avoiding trading. So we maintain that nothing has changed, not in the Nifty, nor in the Bank Nifty. Let's see if the last 15-20 minutes can bring some movement. But otherwise, it's a stock-specific market. I have Birla Soft as a recommendation. I think that's, can be taken as a BTST trade. Keep a stop at 466. Look for a 480 kind of target. And Federal Bank also, I would recommend a BTST trade with a stop at 133 for targets of 136.
Okay, all right, Mitesh, thanks a lot for that. Well, Amrish Baliga joins us on the show to discuss about a few more stocks. Hi, Amrish, good afternoon. Thanks so much for joining in. Well, before we get to your pick, I just want to pull up a couple of stocks. We have Bandhan Bank that's now moved to the high point of the day. The Nifty Bank is still in the red, but a couple of these smaller names are moving up. So Bandhan Bank currently is spiking up as we speak, moving with good volumes as well. Amrish, any view on Bandhan Bank or from the banking pack? Do you prefer other banks?
I would really prefer other banks, but then Bandhan, I think, has moved up basically because post the earnings, which are disappointed, we saw the stock correcting. So in a market like this, where you have most of the mid caps moving up, I think people are looking at some sort of value in the sort of stocks which have not moved and trying to buy those. I think that's one of the reasons why that's moved up. But then in the banking space, I would still prefer Axis or ICICI Bank as compared to Bandhan.
Okay. Amrish, let's talk about your pick as well. Hi, good afternoon, by the way. You like Havells. Tell us why.
Yeah. Clearly leaders in electrical product chain. They are in both the segments, industrial as well as consumer. So right across cables, switch gears, motors, consumer goods like ACs, appliances, lighting, fans, geysers, and a lot more. And in the last, I think 5 years back, they had acquired Lloyd's brand, and the integration seems to have gone decently well. Today, Lloyd's is about 20% of the top line of Havells overall, but yet to contribute majorly to the bottom line. I think that should happen over the next possibly a year or two. And if you look at the products, they have about 6 product categories which are in 1,000 crore plus categories. For example, cables and wires, consumer, lighting, fans, residential switchgear and ACs. Each of them is more than 1,000 crores. And the total top line of Havells anyway is 16,000 crores plus. And till now, Havells has been mostly into aspirational brands, but now they're getting into the premium segment where the margins are better. And I think that should play out over the next 2 to 3 years. And another major focus area for them now is the white label business for exports, which is similar to what Amber is doing. Q1, again, earnings were decent. Revenue was up about 14%. EBITDA was about 11.5% up. PAT was 18.5% up. But still, investors, I think, were a bit disappointed and the stock corrected. So I believe this is a buying opportunity since it's corrected decently well from the higher levels. because the next few quarters should really see a pickup, especially in the consumer goods segment. So my expectation for FY25 EPS is about 29, and my target price here is 15.95.
Okay, all right, Amrish, got that. By the way, on the Nifty itself, there are a couple of stocks from the same sector that are moving in different directions. You have TCS, that's currently moved to the low point of the day. But you have Tech Mahindra, that's one of the biggest gainers, in the last few minutes or so. So I think we should get both those two stocks up for you on the screen. TCS has dipped a little bit lower, while Tech Mahindra is suddenly seeing a sharp uptick. And just one more, Manappuram Finance in the broader markets, that's moving on rather large volumes as well. Yes, Surabhi. No. Any other one? Okay, all right. Well, for the time being, though, let's slip into a short break. But as we do that, let's get some market opinion. Earlier today, we spoke with Pratik Gupta, the Chief Executive Officer and Co-Head at Kotak Institutional Equities, to discuss market fundamentals as well as some of the top sectors to bet on. Let's hear him out.
If you look at the Nifty, for example, we're now trading at 21 times FY24 P, about 18 times FY25 P, for earnings growth of barely about 15% on a price to book basis is about 3 times for about 15% ROE. If you look at India's premium versus other the MSCI EM index, we're now at a premium of about 60%. The longer term outlook is very, very attractive still, and we also remain quite positive from a long-term perspective. But the problem is, I think in the short term, we will most likely go through a consolidation phase. Equally, in the short term, next few months, we don't see a big rally either. So we think, unfortunately, we're going to be stuck in this boring zone, plus minus 4-5% for the rest of this year. Yes, you're right. We agree with the structural story. And I think the more important thing over here is to first look at some of the incumbents. This is actually because of this theme, this risk of disruption for the incumbents. We have been somewhat cautious to depending on the stock, often negative on some of the incumbents in the two-wheeler space in particular, where we think the disruption will be the biggest. We are still continuing to see a slowdown in discretionary spending, and especially in IT companies which are focused on the BFSI and the telecom space in particular. We think there is a risk of further earnings downgrades in the coming quarters. We don't think just because a PE or a promoter is selling, it's necessarily bad news for investors in the long term. There have been numerous instances over the last 5-10 years where promoters or PEs have sold out and the stocks have gone on to do really well. A lot of the IPOs which have come out in the last 2-3 years, they were mainly PE exits, and some of them have done quite well. Paper supply, which is likely to come through both in the form of IPOs as well as blocks. Now that the earnings season is over, when most of these companies and these insiders are out of their quiet period, out of their sort of locked up period, etc., you will start seeing supply coming out.
All right, welcome back. So we got the market, which is down 100 points, and we're basically right there where we started the show at 2:30. Amrish is, of course, still with us. Amrish, the one space which has done so well recently, and of course over the last 1.5 years, is defense. It's different segments, and now we've gotten to a point where not everything in defense does well. For example, shipbuilders are doing well, and then more sort of aviation defense stock like HAL does well, and then something else does well. Small armaments and stuff like that. So within defense now there is a fair bit of differentiation. It's not just this big one theme, which it was about a year ago. Any thoughts, Amrish, and what do you like here in this space?
No, because if you see, most of the stocks have become multi-baggers. In fact, I was among the first to recommend defense about 18 months back. And we've seen some of them becoming 10 baggers, 15 baggers. But at this point of time, whether you talk of HAL or, you talk of any of the others like Mazagon or even Garden Reach, which in fact moved up, very recently, I think most of them have become too overvalued. And there's a reason for that, in the sense the way they are moved because of sort of order flows, focus of the government on defense and Make in India. But I think the question going ahead would be, how would they be able to execute? Because most of them have got orders, I think, multiple times they have seen in the past. So the question is whether they'll have the execution capabilities going ahead, or they would falter on that. And I don't think anyone is really asking that question as of now, because everyone seems to be extremely glad and happy that they've been getting orders. And I think that's already fully priced in. When we start seeing execution issues, I think that is when we will see a decent correction in these stocks. I'm not saying that this story is not there for long term. It's there for long term. But for the time being, I think it's overdone. And there should be a decent correction before the next move up.
By the way, as we're getting to the final minutes of trade, some of the tier 2 banks are really surging higher. From the PSU side, look at an Indian bank. That stock's up about 6.5%. And then there is J&K Bank, and we pointed J&K at the start of the show as well. It's just been on a tear. J&K Bank is up 9-10%. It's a consistent move. Let's pull up maybe a 1-month chart or a year-to-date chart of J&K Bank. This move has become very pronounced in the last 1 month or so. Last today, 9%, about 30-35% up in just the month of August. So yeah, there you go, 23% in August. Amrish, any thoughts? I'm not sure what could be powering this on J&K Bank, but even otherwise, if you look at banks overall, while the large cap names have been suffering and they've been languishing and they've underperformed the Nifty, there's been this PSU rally, this on and off PSU bank rally, and they've done much better. Would you look at this side, tier 2 financials or PSU banks?
No, I think what is happening today in the market is, especially in the mid-cap and small-cap space, including these banks, is that people are looking for stocks which have not moved and have started buying into those, expecting that to gain momentum. And once the momentum is there, others get onto the bandwagon, and that's been the story for a while now. But if you're talking of banks as such, I think the NIMs are more or less, topped off in Q1. And from Q2 onward, we'll see NIMs coming down. So at this point of time, I'll not really go all out and buy into banks. In fact, I've been suggesting people to start booking profits. This was at least in the last 4 to 5 months. I've been suggesting slowly booking out. But then the only stock which I would possibly hold on, only 2 stocks which I'll possibly hold on is ICICI Bank and Axis Bank, like I said earlier. But I'll not really buy fresh.
Amrish, just hold that thought. At the start of the show, we had mentioned a couple of levels. 19,390 was a crucial mark on the upside. We almost went there. We have come back. We're back in the middle of those levels that we gave at the start of the show. So a bit of a range, and it seems the data is supporting that. And in fact, the move as well is in line with what the data was suggesting. But just one stock, Alembic Pharma. I think we should get the intraday chart out there. It's suddenly seen a sharp downtick. It's down close to around 5% as we speak. So let's get Alembic Pharma up for you on the screen. Big downtick is what we're seeing. I'm not sure whether or not there is some news out there, but that's clearly got a big knock. Amrish, do you track this one? Amrish, Alembic Pharma?
I don't track it very closely and won't really be able to tell you as to why it's come down. But then looking at the way the other pharma stocks are performing, this could be a stock-specific news. Could be out. You never.
Amrish, do you have a preference in any of the other pharma names, though? Because that's clearly come back in a big way.
In fact, I mean, my favorites have been Lupin and Sun Pharma, which have actually done really well. So, in fact, just holding on to those, I think there's still some more upside. If you're talking of Lupin, we still have an upside to levels of about 1,300 or so. And if you're talking of Sun Pharma, I mean, I have a target price of about 1,200, 1,225.
Amrish, I think you had Bata as your pick, right? I mean, sometime back, if I remember.
Yes,
we spoke about your love for sneakers, not your love, but I think
exactly. But then it reached the target, exited, and I think post earnings came down today. It's up because of the news which you broke out about Adidas.
Yeah. Any fresh ideas here?
No. I think I'll wait for a while before again getting into Bata.
Okay. All right. Got it. I think we'll leave it there. Amrish, great speaking with you as always. Appreciate your time here on CNBC-TV18. Thanks very much for joining us. So, we'll end with a 110-point cut. And I think, that 40-day exponential moving average at 19,360. Now, 8 points under it. We'll see what the adjusted close is. But basically around the 40 days where we'll probably close with about 3 minutes or so to the end of today's session. Just one thing, I mean, Nifty did do very much, but the small and mid-cap part of the market did sell off a little bit more. I mean, the small cap will end 0.25% higher, but the mid-cap index will end about 0.25% higher. The small cap index came off sharply in the last 20 minutes of trade, and that goes home with nothing. I mean, 12-point change higher. So that had a good 0.25%, 1/3% when we started at 230, but not very much by close. And the Nifty Bank, of course, doing a little better after underperforming over the last 2 days. The Nifty Bank down about 0.18% or so. We'll end there at about 43,860.
Well, Prashant, I guess a bit of a nothing sort of a day if you're trying to pick out trends on the Nifty, on the large cap names. You have some gainers on Adani. Let me actually just point out the specific Adani stocks that were up and about. So from the index, it's Adani Ports, which had a decent day. Adani Power, which is where the big block happened yesterday, that managed to go home with a gain of about 2%. Adani Enterprises, maybe 1.5%, but the other Adani stocks were on the weak side. Beyond the Adani names, let's talk about what worked for the index. Titan, for sure, up 2% as gold prices have cooled off quite significantly. Some auto names like Bajaj Auto, Hero Moto, just around the flat line, not much there really. Then there is an SBI somewhere which has outperformed the other banking stocks. SBI is up about 1%, Axis Bank about 0.5%. That's where the list of gainers really ends for the index. It was a down day, there's no denying that, because you're closing down 120 points. And ITC was leading that pressure, the worst performing stock on the index. Then you had, the big boys falling behind: Reliance, L&T, some of the names like TCS as well. IT was weak, actually, even beyond TCS. LTI, Mindtree, Infosys, most of these names were dragging their feet. Some of the non-banks like Bajaj Finance also down by about 1.5%. And some of the commodity plays, JSW Steel, for instance, down about 1% as well. Lever, actually, it's more down than up, very, very clearly. It's just that banks haven't fallen as much. But a lot of the other names, Reliance, FMCG, L&T, these other big boys, big supports for the market, they weren't quite adding up today. Mid-caps, I guess, mixed trends, Nigel?
Well, that's right. Let's just highlight a few stocks that hit upper circuit since we just got a few seconds to move. We had BF Utilities that was up close to around 20%. BF Investments that sold stake in BF Utilities. That as well was higher. Some of the big underperformers, actually. You had Coffee Day that was up close to around 18% in today's trading session. Jaicorp was up more than 10%, 15% actually. Avalon Tech as well did pretty well. And DB Realty, I think, end of the day, we'll be waiting by to find out who were the parties in that 1.5% trade that happened. It happened in the first hour itself, so that'll be another stock that'll be on our radar. So select stocks did very well, though the index ended down with a cut of around 100 points.
Okay, well, that's then trade at the end of this Thursday. We're waiting by to get more cues from global markets. We'll have the jobless claims data, and then let's see if Wall Street can shrug off the weakness that it has been in the grip of the last couple of sessions. For now, it's a wrap from the entire team that puts Closing Bell together. Thank you very much for watching. Don't go anywhere, because our Thursday special big deal is coming up next.